What's going on, guys? Welcome back to another video. In this video, we're going to be talking about AMC and GameStop. We're going to do a little bit of a blended joint video because this new DTCC005 affects both AMC and GameStop, as well as the overall market and how it has been run in terms of short synthetic shares and failures to deliver. So we're going to go over exactly how this new request for a new rule to be put in place, it could lead to the end of synthetic shares being put into the market. Now, we're also going to briefly touch upon AMC's new 500 million share potential offering, and we're going to go over some of the key points that the CEO said in an interview and how it could lead to AMC doing some acquisitions in the future, which would massively benefit AMC fundamentally as a company going forward. And we've already seen AMC actually do a couple of these strategic investments, so that gives us some evidence that AMC is going to be open to doing this in the future. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, Webull is the brokerage that you guys see on screen in all of my videos. All you have to do is check out that link down in my description below. All you have to do is set up an account, deposit over $100, and you guys get your 2 free stocks. Now, this is also a great way if you guys would like to help out and support the channel, because when you get your 2 free stocks, I also get a free stock as well. And if you guys enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in getting this information out to as many people as possible. And if you want to stay up to date on all of these stocks breaking news, make sure you hit that subscribe button and turn on the notification bell. So taking a look at the chart of AMC, the actual news articles that came out yesterday about this 500 million share offering, in my opinion, they were kind of BS because we all knew about this already. And when these new articles and the headlines came out, the headlines were very misleading and said that AMC was going to be doing a 500 million share offering. But if you have been watching this stock for a while, you guys knew that this was already mentioned, and the vote on when this is going to be happening is going to be occurring in May, and all shareholders are going to have a vote. So this steep drop in AMC's price was mainly due to this misrepresentation of news, which in my opinion was really just a terrible way to end the week. Now, that's not really an opinion. This was a pretty terrible way to end the week, but I do think that the squeeze is still on, and it is going to be happening in the near future. Now, I don't have an actual date or a price target where AMC is going to get to, because I don't think that is really helpful to any of you guys, because none of us really know. But I think it is best to just hold on and wait for all of the different news pieces to come out. We are unveiling different pieces of news about this situation every day, and eventually it is going to crack. I want to bring you guys back to the actual analogy that I've been using. It's like we have a giant stick of dynamite with a big candle wick coming out of it, and we are clicking the lighter. The lighter is sparking but not lighting, and it's just going to take one piece of news to actually spark that lighter and light the fuse to set off the dynamite. So now let's get into this Reddit post that gives us a lot more insight into DTCC005. So when we come over here, we can see that, let me summarize this risk alert for you. So how do hedge funds manage to make it look like they covered, this has to do with the synthetic shares out in the market right now and all of the manipulation going on. I've said before that the hedge funds are manipulating what the actual short interest is. Now, there's a lot of evidence for this. You can see that the short interest is reported in vastly different amounts on all of the different data sources that we look at, which strongly suggests to me that there is manipulation going on, because if they can make it look like the short interest is a lot lower than it actually is, then all of you apes could think that there's not as much interest in this anymore on the short side. It's not really going to squeeze, and you might sell your position. That's exactly what they want you to do. Now, there's 2 types of ways to make it look like they've covered. So buy, right, trade, selling deep in the money calls, buying a synthetic longish share from the market maker, and buying a married put, buying an option put with a synthetic share. So we've gone over this in my last video. It makes sense that they would buy these deep in the money calls, because if they do have to cover on shares that they don't actually own or have any access to, these deep in the money calls is going to give them access to a boatload of shares at a lower price, which could help them hedge. Now, I'm not going to go into all of these details on how they're actually hiding and closing their positions. If you guys want more information on this, Andrew Mo Money actually has a great video that he posted today explaining all of this information on how the hedge funds are actually making it look like they've covered. So if you guys are interested, make sure you check out his channel. He's got a lot of great information. And if you guys don't know about him already, I think you guys would definitely enjoy it. But the really important part of this actual Reddit post is coming down here. So how DTC 005 is a game changer. Well, it's almost too real to be true, but on Thursday after the market closed, DTCC submitted a rule filing to be reviewed by the SEC. Here is a high-level summary of the 3 main points first, but I will mostly expand on the last one. So securities can't be borrowed more than once. Some securities won't be able to be used as collateral. Deceptive short/naked options selling or buying won't be possible. Hedge funds will need to have shares when buying puts or selling calls. There's going to be no naked selling of calls or puts anymore. If you are buying puts, you are going to need to have the correct amount of shares. And if you are selling calls, it's essentially going to be only covered calls are allowed. Now, what they are introducing is an additional reporting field, a status or system notation tracking on security to track if this security is borrowed, used as collateral, or coupled with an option. So this is brilliant. They may not need to involve the SEC at all because they are not regulating anything. They're just adding a level of reporting in the trades they manage. Now, when we come over here, this is how short interest data is reported. So FINRA requires firms to report short interest positions in all customer and proprietary accounts in all equity securities twice a month. Essentially, what this means is that all of the short interest data that is being received by all of these different data sources is just what the hedge funds are telling them that their short interest is. It is in their best interest of all of the hedge funds and institutions to blatantly lie to all of these different regulatory institutions about what the actual size of their short positions are, because if they are able to create some public sentiment and everybody thinks that the short interest is a lot lower than it is, odds are the share price would fall because it would create a lot of selling pressure, as I said before. And again, the highest fine that I have seen from all of my research on given to any one of these hedge funds or institutions for misrepresenting their short interest data is $1 million. That is nothing to these hedge funds. So it's really a cost-benefit analysis that they are doing in their firm to just blatantly lie and make it seem like the short interest is a lot lower than it actually is. But with DTCC 005, we can see here that there's going to be no more synthetic long, failures to deliver, or other effery. This will force the Reg SHO closeout requirement, which will trigger the MOAS into Uranus. So if short sellers are facing a squeeze because shares are hard to buy or scrutiny for holding an illegal short position, they can create an appearance of having closed their short position through the use of deceptive options trades. It does not make them cover. It just resets the clock so the failure to deliver numbers doesn't skyrocket. DTCC is unhappy about this mess and wants to ensure options can no longer be used like this, which is why they want to put this regulation in that they actually have to have the amount of shares. When this gets enforced, it will force a closeout requirement and it will force the hedge funds to buy the stock in the actual market, launching our rocket to the sun. Now, this edit is pretty important. There's a lot of questions around when this will go into effect. This Reddit poster believes it's effective immediately after the SEC approved it. Now, how long will this take? Surprisingly, not that long. It could even just be a week or so. So this would be big news if it comes over the next couple of weeks. So it is possible that the squeeze, if and only if this DTCC 005 gets approved, happens a lot sooner than everybody expects, and the hedge funds are going to get beaten in a massive way. Now, I also want to cover briefly some acquisitions that AMC could be doing in the near future. So when we come over here, we can see these are some of the details from the actual interview that the CEO had with CNBC. So we can see in his introduction on CNBC interview, one of the first comments was Godzilla vs. Kong opened last night. It's a movie about apes, and in the world about meme stocks, apes is a good thing. Maybe it's an omen. Now, that's a pretty interesting comment from the CEO. So then he says, says we are formally asking approval from our shareholders to authorize another 500 million new shares that the company could issue if it wishes. There are a lot of benefits to our shareholders having more authorized shares, and will be sensitive to dilution issues. The next one really stands out, which is the one that I want to discuss, and it says maybe there's some merger acquisition opportunity, maybe buy other companies inexpensively and using our stock as currency. This would be big news. So we all know that streaming is the next big thing, and we've actually seen AMC get into this streaming market over the last week. So when we come over here, we can actually see that Cinedigm disclosed on March 26, 2021, Cinedigm, a wholly owned subsidiary of Cinedigm Corp, basically they entered into an equipment purchase agreement with American Multi-Cinema, AMC. So Cinedigm is a streaming service. We showed this in one of my previous AMC videos, but if AMC is going to get into the streaming market, they are going to maintain their relevancy for years to come. Movie theaters have been on the decline over the past couple of years, and if they are able to get into the streaming market, just fundamental news like this could skyrocket AMC, and it has nothing to do with these short squeeze. But since we have all of these synthetic shares out in the market, we have all of this dark pool and OTC non-ATS data coming out, any news like this fundamentally that is going to send AMC higher is going to be great for the shareholders in this company. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button and turn on that notification bell once you hit that subscribe button so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great long weekend, and I'll see you guys in the next video.